All right. Thank you all for joining the introduction to the stock market. In this class, I'm going to take 40 minutes to go over the introduction to the stock market. We're going to go over what actually makes the market move. We're also going to go over what the entire notion of the stock market is. Without taking much time, thank you all for joining the stream. Let's go ahead and begin and see what we have going on for the day. We're going to start with the foundation, right? Because if you want to start day trading, you need to know the foundation of what the stock market is. You need to know what moves the stock market. You need to know the different sectors. You need to know the economic events. And there's a lot of things you need to know before even jumping into the charts to start looking at what you're seeing in the charts to make sense. So we're going to look at what the market actually is and what you own when you buy a share or when you trade. Like I said, we're going to look at what the stock market actually is. It's a marketplace where ownership in real business is bought and sold every single day, every single trading day. You can think about a stock market like a grocery store. Let's take for example Walmart. Walmart, it helps producers sell goods to consumers like us. As simple as that. There are two main exchanges in the stock market, right? We have the New York Stock Exchange and we have NASDAQ. The New York Stock Exchange is actually a physical building, whereas as NASDAQ, everything is done online. The New York Stock Exchange is one of the largest stock exchange when it comes to market cap. A market cap pretty much means what the company is worth. So every company's net worth trading on the New York Stock Exchange exceeds $100 trillion. Whereas as NASDAQ, everything is done online. This is where you have your tech sectors actually IPO. You have things like Google, Meta, Nvidia, and the rest. That's where they IPO. And how orders are actually matched, buyers and sellers submit an order. So for example, you enter Walmart, you're looking to buy uh, you're looking to buy rice. Let's just say you enter Walmart and you want to buy rice, right? Producers that actually have rice farms produce rice and sell rice has sold the rice are selling rice in Walmart. So you enter there, you want to go buy rice. There are different categories. That's where sectors come into place. You have the produce sector, you have the dairy sector, you have the fruit sector. So you have different type of stocks in the stock market, right? Then at Walmart, you also have the cashier, right? The cashier is the person that actually helps you transact, helps you facilitate that exchange between goods and services or goods and currency. So you can think about the cashiers as the market makers. They are the ones that ensure liquidity is available in the market. They are the ones that ensure that your market is being filled. Price also goes up. Price is equals to supply and demand. What does that mean? Price goes up when a lot of buyers are getting into that stock. So if a lot of buyers want to buy Apple right now, they're going to make the price go up. If a lot of buyers think that Apple is not doing what it's supposed to do and they start selling Apple out of their portfolio, then you're going to see Apple going down easily. The market moves and the stock price changes every millisecond. It's open for 6.5 hours of the day. So I'm personally in Pacific time. I'm in Arizona. So the stock market for me is gonna open 6:30 a.m. to 1 o'clock. That's without the daylight savings. During daylight savings, it opens for me 7:30 to 2. But if it's Eastern time, it's gonna open 9:30 to 4 p.m. And you're gonna ask, what is initial public offering? IPO. Initial public offering pretty much means that's when a company first sells shares to the public. It lists on an exchange like the NYSE or the NASDAQ. After that, shares trade freely between investors based on supply and demand. Simply the first time it starts trading in the stock market. what are stocks, right? You're gonna ask. The next question of you obviously is gonna be what are stocks? Buying a share is just buying a small piece of ownership in a company. So, for example, if you, in your portfolio right now, if you have some Google shares, you have some Apple shares, you have some Schwab shares, you can actually boast, brag about that to your friends and say, hey, I own some companies. You know, I own Amazon, I own Google, I own Meta, and the rest. Price appreciation simply means you buy Google at $100. Tomorrow it goes to $120. You have a profit of $20. That's price appreciation. With regards to price appreciation, there's something you got to know. There is unrealized gains, and then there's realized gains as well. Unrealized gains, that simply means you have not taken profit from that trade, whereas as realized gains, that means you've taken profit, you've sold that stock, it's no longer in your portfolio, you no longer own it. Now, dividends. When it comes to dividends, these are just uh, portions of profits that is given to shareholders on a quarterly basis. Some people use this as passive income just because some companies pay dividends on a monthly basis. And just think about it. You own a company, that means when they profit, if they decide to share that to the shareholders, then you get some money out of it. With regards to the market capitalization, it's divided into three types, right? You have the large cap. A large cap, you're gonna have your Apple, Microsoft, Nvidia. I'll consider large cap stocks as stocks that actually move the GDP in a country. Mid cap stocks, you have potential growth that's from $2 billion up to $10 billion. And then you have small cap stocks, which is going to be from less than $2 billion. Now we're going to get into the meat and the gritty of the stock market. If you have any question, please let me know. Any questions, any questions, any concerns, any worries, any cries? All right. So we're going to go into the different sectors. So like I was saying in the beginning of the video, when it comes to sectors, you can consider sectors as different side of the grocery store, right? You have the dairy, you have the veggies, you have fruits, you have meat, different things, right? So the first one we're going to talk about is technology. The technology sector is a compilation of it's a compilation of companies that makes computers, phones, software, chips. You can think of companies like Apple, Microsoft, Nvidia. Why traders care about these companies? Tech sectors are very, very volatile. They also move with interest rates. So if interest rates are really high, tech sectors actually feel them first. If they are low, then they actually feel them first as well. You can think about the tech sector as people that actually make the future of technology, the AIs, things that are actually going to help us in the future. The next sector we're going to talk about is the financial sector. The financial sector, what is the financial sector, right? The financial sector is a sector that actually helps the economy grow. It helps you and I invest our money. It helps pack our money. So the financial sector, examples of the financial sectors is going to be JP Morgan Chase. You have Goldman Sachs. You have Bank of America. Traders, why traders care about the sector? Banks make money when interest rates are high. That means lending is high. So financials are the best indicator of the Fed, what the Fed is going to do. Financials are actually the best indicator of what the Fed is going to do, if they're going to increase interest rates, reduce interest rates, or whatever they decide to do. The next sector we're going to talk about is the healthcare sector. What is the healthcare sector? The healthcare sector is pharmaceutical companies, hospitals, health insurance, Johnson & Johnson, United Healthcare, Pfizer, Eli Lilly's, and the rest. Those are your sectors that actually, help you with the medical infrastructure side of things. They help you with your insurance, they help you with hospitals, they help you with vaccines and all sorts of medical related issues. Why traders care about this sector? People need medicine and healthcare no matter what happens in the economy. In a recession, people will get sick. In a recession, people are still going to get sick, right? This is a defensive play right here. You need the tech sector in your portfolio so that way, no matter how the market is doing, your portfolio still stays strong. The next sector we're going to talk about today is the energy sector. What is the energy sector, you will ask? The energy sector is pretty much oil and gas, right? Oil and gas company. We have things like ExxonMobil, we have things like Chevron, we have things like ConocoPhillips. Why traders care about this sector? Energy energy stocks move on oil prices, not company earnings, right? So they're also tied to geopolitical events. So, for example, the Iranian war, you can see the energy sector going up. ConocoPhillips, you can see Chevron, you can see um, Phillips and the rest. The next sector we're going to talk about is the consumer sector. In the consumer sector, there are actually two types of consumers. We have the consumer. We have two types of sectors. We have the consumer discretionary, and we have the consumer discretionary, and we also have the consumer staples. Consumer discretionary are things that we need on a day that we need. So we've paid all our bills, we still have some money. I want some Jordans. Of course, I'm gonna go buy some Jordans. I got the money, so uh, I want a new laptop. I can get a new laptop. I want a Tesla. I can get a Tesla. Whereas as consumer staples, these are things that you gotta live with. These are wants, right? No, no, no. These are needs. Sorry. Consumer discretionary are wants, whereas as consumer staples are needs, right? Stuff people need no matter what. We have like groceries, toilet papers, shampoo, Coca-Cola, Procter and Gamble, Walmart's, and the rest. The next sector we're going to talk about is industrials. Industrials are the backbone of the GDP of the economy. This is the physical backbone of the economy. Companies that make and build stuff. For example, you have CAT, they build tractors, they build drills. We have General Electric. Why traders care about this sector? Industrials are the economy's report card. What do I mean by that? When the economy is growing, companies buy equipment and build things. CAT sells bulldozers, industrials rally when economy slows, nobody builds anything. Industries crash. Communication sector. You can think about the communication sector as companies that communicate and entertain. Companies like Meta, Facebook, Instagram, WhatsApp. Companies like Google. We have the internet. We have emails. Disney, with the movies and other stuff. So that's gonna be communication. We also have utility. Utility is a defensive sector. When I say defensive sector, I pretty much mean utility, regardless of interest rate, is still gonna be there. People are still gonna need it. Um, Electric companies, water companies. You have Duke Energy. You have other energies as well. You have Duke Energy. You have um, Next Era. I think we have some people that just joined. Let's see. If you just join, send something in the chat, please. If you just join, send something in the chat so I know you're paying attention. If you just joined, send something in the chat, please, so I know you're paying attention. All right, we're gonna continue with what we have going on. We have the utility sector as well. What is the utility sector? Utility sectors are sectors that, regardless of how the economy is going, we still need them. Sectors like Duke Energy, we have companies like Duke Energy, we have companies like Next Era Energy as well. Why traders actually care about this sector? Utilities are boring, but they are very stable. They don't move much, and there's a point why people actually watch them. They watch them to gauge how their economy is doing. For example, market crash hard. Um, Everyone is scared. They move money into utility sector so that way the price doesn't fluctuate as much. Then the next sector we're gonna talk about is the real estate sector. What is the real estate sector pretty much? Real estate sector is the REITs. It's all made up of REITs. REITs are real estate investment trusts. This is a bucket that actually grant loans to people and help them build houses. They help them build apartment buildings, build residential properties, and the rest. And you have minerals or materials pretty much. Materials, that's gonna be things like gold, silver, copper, and the rest. So we're gonna talk about how to actually read a stock. With regards to how to read a stock, it's very easy. You enter the stock market, the first thing you're gonna see is the price chart. So right here we have the price. For example, Apple is trading at $213.40. You have the ticker symbol AAPL. Ticker symbol is what the stock exchange use. You can think of it like as an ID card for the stock. This is a PIN number the exchange used to actually know what stock you're talking about. Plus $3.20. You can see that the stock is doing good for the day, and the percentage is how what percentage of what percentage is doing for that single day. Sorry about that. So rule of thumb, volume confirms price moves. For example, if a stock is up 5% on a 10x volume, then it's very different from a stock up 5% with very light volume. That means a lot of people are not really looking at the stock, right? So like I was saying, we have our ticker symbol. Ticker symbol for stocks is made up of 3 or 4 letters, whereas as for mutual funds, it's made up of 5 letters and above. So that's how you can differentiate what is a stock or what is a mutual fund when you open a brokerage account. Um, what else am I missing here? PE ratio. The PE ratio is pretty much the price plus earnings. It tells you if a stock is expensive or relative to its profit. So for example, Apple is trading at $213.40. The PE ratio, you take the earnings, how Apple is doing, take its profit divided by its actual price, and then you get the PE ratio. The next thing I'm going to talk about today is indexes. There are 3 main indexes I actually look at on a daily basis, but I had to add the Dow Jones here just because it's the oldest index, and people still look at the Dow Jones. An index it tracks a basket of stocks, so you can gauge the overall market. You can gauge the health of the stock market at a glance. So, like our analogy in the beginning of the call, when I said a stock market is pretty much, think about a stock market like a grocery store, right? A grocery store has different sectors. Think, think about it. Hello, hello, hello. Welcome in. How y'all doing? Drop something in the chat, please. Drop something in the chat. Thank you, thank you. Hey, mama. Hey, baby girl. Hey, Jamia. How y'all doing? Thank you all for joining. Thank you all for joining. All right, we're gonna continue with what we have going on. Um, so we're gonna talk about indexes today, right? What is an index? An index tracks a basket of stocks. It gives you the market health at a glance. So, for example, like I was saying in the beginning of the call here, the stock you can think about a stock market like a grocery store, right? A grocery store has different departments. You have the dairy department, you have the veggies, you have meat and others, all sorts of things, right? But in that department, there is one thing that tracks, there's one product that tracks that department. So for example, we have the S&P 500 here. The S&P 500 is the largest index. It tracks the best 500 stocks in the stock market. The best 500 US stocks in the stock market, the single most watched index in the world. I pretty much watch the SPY every single day. It tells me what the market is doing, if it's going up or if it's going down. QQQ is the top 100 Nasdaq stock. Like we said in the beginning, with regards to the Nasdaq stock exchange, the Nasdaq is where you have things like Meta, Amazon. Yeah, that's your tech sector. You have the tech sector, the IPO on the Nasdaq. And to track the entire Nasdaq, if you don't want to track every single stock, you just track QQQ. If you see in a given day that QQQ is going up, more than likely you have Microsoft going up, you have Apple going up, you have Nvidia going up, you have Meta going up. And a lot of people trade QQQ and the tech sector because it's very volatile. You get really, really good moves on a daily basis on QQQ. The next index we're going to talk about today is the IWM. What is IWM? That's the Russell 2000. That's small cap stocks. This is stocks that moves. This is what you use to actually gauge how the economy is doing. Small cap stocks, right? If IWM is going down, know that they're probably going to raise interest rate. They're probably going to increase interest rate at some point. If it's going way up, know that they're going to reduce interest rate at some point. Economic drivers. So this is the next part of the next part of the course. We started at 4 o'clock, so thank you all for joining. The next part of the course is going to be what actually moves the market in the macro overview level, right? We have things like interest rates. So whenever the Fed increases interest rates, that means there's a lot of money in the circulation and we have to reduce that. So it's hard for people to get car loans. It's hard for people to get mortgage loans. It's hard for people to even buy things, because when the Fed increases interest rates, then you have corporates actually increasing goods and services, and then that in turn gets felt by the consumer, which is you and I. We also have inflation data. CPI is Consumer Price Index. Consumer Price Index pretty much calculates what the price is at right now compared to what it was last month. And we have this number come out every single month. The PPI pretty much is the Producer Price Index. So think about CPI as it tries to compare what we're spending right now from what we spent last month in grocery stores, whereas as Producer Price Index, it compares what the grocery stores actually spend to producers to get those products, right? It takes into consideration things like mining, agriculture, transportation, everything into consideration to give you the PPI number. The employment reports, the NFP, that comes out every month as well. NFP pretty much gives you the numbers of jobs created for that single month. So if it's, let's just say we're in the month of May, and the Fed comes out and say, hey, we're going to create 200,000 jobs in the month of May. But then the number comes out in June, they only created 50,000 jobs. That number was low. That means the economy is not really doing well. Traders look at this to gauge how the economy is doing. So if the number comes out low, we'll probably sell off just because we're protecting our portfolio. The GDP growth, that's pretty much the numeric value of that's the monetary value of literally everything that happens in a country for a given period of time. So we're talking about government loans, we're talking about what consumers spend. We're talking about what companies actually pay people. We're talking about literally everything that has to do with money in a country for a given period of time. So that's why I said in the beginning of the call, whenever you're looking at stocks, whenever you're looking at a different stock sector, you look at only companies that move the GDP of a country. Things like Nvidia. Right now you have Donald Trump, you have some of the tech sector CEOs in China, in Beijing, China, talking about, partnerships. Those are companies that move the GDP of a country. We have geopolitical events. Geopolitical events are things that, the war we had with Iran just recently, that's definitely going to move the market. And last but not the least, for the macro, is going to be FOMC. What is FOMC? FOMC is pretty much the day Jerome Powell comes in, sits up, good morning, and the stock market pretty much tanks. But it's if interest rate decision, in plain English, interest rate decisions. That's when the Fed chair was Jerome Powell. Now we have Kevin, but he will come tell us how the economy is doing, give us guidance for the future, and tell us if we are going to raise interest rates or if we're going to reduce interest rate. FOMC meetings happen 8 times every year. We just had one, I think, last week. Now, what moves the market in a micro situation? We're talking about little things that moves individual stocks, not the entire stock market. So when it comes to things that actually moves individual stocks, now we're talking about things like earning reports. Earnings reports, this is a report that companies have to report every single quarter. A quarter is 3 months, right? Every 3 months, a company goes out, picks a day in a month, reports how they're doing, reports the profit, their loss, the balance sheet. If they're in debt, if they're making profit, they report everything about the company. And then during that earnings report, it's pretty much a conference, right? Every company picks a day to release their earnings report. At the end of a report, we have revenue guidance. At the end of every earnings report, the company is going to give us revenue guidance, give us what they think they're going to be making for the next month or so. Then things like product launches, right? So we have Google launching another AI agents, Nano Banana. We have maybe Apple launching another iPhone, another iPad. Those can actually move the price of a stock for every given day. We have things like lawsuits or investigation. Right now, Tesla, Elon Musk is actually going through a lawsuit with Sam Bankman-Altman, who is the CEO of OpenAI. So that can actually move Tesla. Uh, Earlier last year, we had the assassination of the United Healthcare CEO that tanked that stock like crazy. I can even show you right now with regards to that what I'm talking about. So if we're looking at the United Healthcare and we're looking at what really happens, right? So let's look at the 5-year chart and let's see. Let's do a little bit of research here. When did the United Healthcare CEO get assassinated? All right, so he got assassinated December 4th of 2024. Let's look at 2024. This is 2024 right here. December. This is December 4th of 2024. You can see United Healthcare was actually trading at $619. So there are a lot of things that actually happens in December of 2024 that caused United Healthcare to actually go down more than 50%. So the first thing is going to be right here at around December or ending November, December. the assassination of the CEO. As you can see, it went from all the way $622 all the way down to $478. That's almost $150 in the span of a couple of months, right? Try to come back up, but it started going through a lot of lawsuits with regards to them not increasing, insurance claim, denying insurance claims, increasing insurance bills, all sorts of things. That lawsuit made them to go from $600 all the way to 200. Oh my God, it's at $200 and 20. This is a good buy actually. So if you're thinking about long term, you can buy this for the long term to actually retest that upside. But let's not get into the charts. Let's go back to what we were doing here. All right, so that's gonna be it for what actually moves the market, right? When it comes to moving the market, you have the macro, that's things that move the economy, and then you have the micro, things that move individual stocks. The next thing we're gonna actually talk about today is the economic calendar. You hear me in my videos every day. I'm gonna go over the economic calendar so you don't have to. You pretty much have to look at the economic calendar every single day if you're a serious trader, just because you don't want to be met with surprises during a trade, right? So, for example, you didn't look at the calendar, so you don't know it's FOMC day. FOMC days are really, really volatile. A stock can move from $400 to $420 within 20 seconds. In the blink of an eye, right? You're in a trade, you really are not aware of the fact that it's FOMC. You blink, the trade is going against you. That's why you always have to look at the economic calendar in the morning before you even start taking your first trade, in my opinion. I think I already explained most of these, but I'm going to go in details a little bit. When it comes to CPI measures inflation. How much do everyday goods cost, right? If it's higher than what it was expected, it measures the consumers. This is what we spend on a day-to-day basis. Whereas as PPI actually measures what the wholesale. So what we're talking about what Costco spends, right? Costco, Sam's Club, the wholesale stores, what they spend on a month-to-month basis. That's the number that is used to calculate PPI. FOMC happens 8 times a year. The Fed chair is gonna come tell us how the economy is doing. If it's shit, if it's good. They increase the interest rate, they reduce the interest rate. NFP job reports, strong job numbers, the economy is doing good. Weak job numbers, the economy is doing bad. GDP, overall economic output, right? So we're talking about the monetary value of the economy, what it actually did for the given time frame we're looking at. It's probably going to be monthly, so we're going to look at how we did for that month. And then earnings report is individual stocks. Man, I've seen earnings that move the market, and I've seen earnings that tank the market. So as a serious trader, you don't really trade earnings, you don't trade FOMC. Those are days that you actually sit back and watch, and you're cash heavy. That's better. And sorry, I didn't see this question. I don't only trade options. I trade stocks. I trade futures, and I trade options as well. Lately, I've been trying to trade Forex, but still getting into it. I think if you know how to read technical analysis, if you know how to read the charts, then you can pretty much trade anything, in my opinion. With regards to market hours, what are market hours, right? The market opens 6.5 hours every single day. I'm in Arizona, so I have mountain time, but I'm gonna say I have mountain or Pacific time. You can either of them. So the market for me opens 6:30 a.m. to 1 p.m. Whereas if you're using Eastern time, then it's gonna open 9:30 to 4 p.m. Eastern time. The best time to trade is from the first 2 hours. I would say the first 2 hours of the open. You have a lot of volatility. Everyone is jumping into the market. That's where you can make good move. In the midday, the market makers are going to take their lunch, man. I'm already done with my profit. I've probably made my profit already. I'm not in the market. So the market, that's where you see a lot of fake breakouts, a lot of fake moves, a lot of manipulation. And then you have power hour, which is the last hour of the market. The last hour of the market is pretty much tells you how the market did for the given day and if it's going to squeeze to the any direction and stuff like that. Let's see. News creates opportunity, right? Okay. All right. So I think this is actually the last slide. So thank you all for joining. Let's just go over the last slide quickly here. News creates opportunity. The reason why I had to create this the last slide is just to give you some do's and don'ts about a disciplined trader, right? With regards to a disciplined trader, we check our calendar before the week starts. We check our calendar every single day to make sure we're not met with surprises during the trading hours. Has rules for news events and advance in advance. So, for example, um, let's see. This is Trade Intellect's Redline, where you can actually set up your rule. You download Redline, you can set up. All right, for example, let's go. Just set it up real quick. I'm a retail trader. You know, I've been trading for 4 years now, so I'm an advanced retail trader. I trade stocks, I trade options, I trade futures, and I'm gonna go to the next one. What are you here for? Pretty much, as a disciplined trader, I'm here to build discipline, or I'm here to build my edge. I'm here to coach others, or I'm here to pass my evaluation. So, in the finance world, right, there are things that we call prop firms. Prop firms is where you can actually pay a Prop firms is where a propriety firm is where you can pay a company. For example, you pay them $200, $500. They give you a 50K account, a $50,000 account. But that's not real money, right? You're trading fake money, but the profit you make from that account, you actually get it in real life. That's why I had this passive prop eval over here. But I mostly use trade intellects to build my discipline. So do that. Set guardrails. How much daily loss I'm willing to lose on a daily basis. I'm willing to lose 2% of my account. I'm willing to take 6 trades, consecutive loss. If I lose 3 loss, and if I have losing trades in a row, I'm done for the day. You can also actually connect your brokerage account, and let's actually do it. Let's do it. Why not, right? In the onboarding phase, you connect your brokerage account, and let's see. All right. You can see I have three Charles Schwab accounts. This is my road to 10K. This is the account I use for challenges every day. My PCRA account is my retirement, and then you have the Forex account. But you're gonna click what account you would like to link to Trade Intellects. Once you click it, it takes you back to Redline. Um, you're gonna see it quickly. It's gonna show you that your account is being linked, and then you can move to the next section of the onboarding process. So with regards to choosing my stop loss, so I'm gonna show you. That's a very good question. Um, I'm gonna show you here real quick. So for example, I'm gonna use the 15-minute chart, and I'm gonna use Tesla as an example, right? So this is a very good chart, and As you can see, I trade Tesla on a daily basis, so I have my levels drawn and everything. So with regards to choosing stop, so before you even choose a stop loss, you gotta know your entry points. You gotta know where you're entering the trade. So for example, you see these yellow lines. These yellow lines is giving you this is the pre-market. This is before the market opens. This is that 2 hour window before the market opens, right? And then it opens. So for example, this is Wednesday 13th, 2026, earlier on this week. The market opens with a red candle. That signifies it's going down, it's bearish. However, you can see that it actually had a gap up right here. So it gapped up from yesterday, the previous day's close. Not to go into the not to confuse you a little bit, but I'm gonna enter my trade if it breaks this green line, and my stop loss is gonna be this blue line right here. So for example, if I'm entering a Tesla trade at $439.81, I'm betting that the stock is gonna go up to my next level, my key level here, which is $447. Then my entry point is gonna be 439, and then my stop loss. The stop loss is where I'm wrong at. So if the price goes down to $437.11, then I was wrong. Then I'm gonna get out of that trade. That's what a stop loss is. But if it keeps going, then my take profit is probably gonna be at $447.89. I don't know if that answered that question, Mama. And also, if you even want, if you're like, okay, I don't know where to enter or when to exit, you can actually use our Redline extension. So we have our extension right here. This is the Redline extension. You can download it to your laptop, your computer. You see a trade right here. You're like, okay, what are you seeing so far? I'm gonna ask Redline what it's seeing so far. What are you seeing? What will be my stop loss? It's gonna take a screenshot of your chart. Ah. All right, I guess I've reached the token for this account. All right, let's change the account. Let's change the account. Let's change the account, right? Because we have rate limitings, and just because we don't want people to abuse our AI agents, so we have rate limits. I've been using the AI agent for an hour or two now, almost all day. So it's limiting me to proceed. I'm gonna open another account here. You know what? I'm gonna actually do this as a video and then post it online for you to see. So I'm gonna go in details with it just because I just had a warning that we have 10 minutes left. Let's see if we can do it. Let's see if we can do this. All right. So let's see if we can actually ask our agent what it's looking at. So looking at current chart, what would be a good stop loss and a good take profit? So what it's gonna do is we have three AI agents actually going through the entire. Well, I guess we've reached the Redline bits for the day, but just to explain a high level overview of how this works is we have three AI agents that goes in there. It takes a screenshot of your chart. It goes in depth and explains to you every entry point it sees, every exit it sees. It also takes into consideration how you trade, and then